Should I buy the dip? Is this a correction? Should I liquidate my position? Is this the end of Bitcoin? If this is one of the questions that have been bothering you, then you need to look no further. In today's short video, I will share with you my personal Bitcoin price prediction based on what I can technically figure out on the trading chart through the aid of price action and the most commonly used technical indicators by professional traders in the cryptocurrency industry. As a trader, we need to understand no price trends last forever. Price moves in cycles, and this is why a trader needs to have some basic understanding of market cycles. Market cycles are a natural advent in any market. However, because the cryptocurrency market is highly volatile, market cycles are essential to understand in cryptocurrency specifically. Given that, let's go over what a market cycle is all about. A market cycle is a period between a high and a low. I will use the chart of Bitcoin here to educate you on what the market cycle is all about in its simplest form. As we can see on the weekly price chart of Bitcoin, there were ups and downs in price movements. These ups and downs can be divided into four major parts that make a market cycle. These are the accumulation phase, the markup phase, the distribution phase, and the markdown phase. As we can see from historical price actions, market cycles are repetitions of waves patterns. We can tag this medium here as the first market cycle, the second medium here as the second market cycle. The aggressive bullish and bearish move here can be tagged as the next potential third market cycle medium. As we can see on this price chart, none of these market cycles are the same. We can see the length of expansions from the trough here to the peak here varied. Also, the contractions from peaks to troughs varied. We can see this basic concept shows that human emotions and market mechanics create bubble and bust cycles called market cycles. As we can see, the accumulation phase showed us where smart money, institutional investors, and early adopters accumulate Bitcoin at a low price. The markup phase shows us where the price of Bitcoin goes up. The public were excited, and the price goes up even quicker as many FOMO buys set in. The distribution medium here showed us how those who bought lower at the accumulation phase start to liquidate some of their position as they mark up the price. And the markdown medium level revealed the state of panic. We can see the repetition of this market cycle's patterns. Now let's relate this market cycle to technical analysis and trading indicators on our trading chart. As you can see, I marked some major key levels on the weekly chart of Bitcoin. Here's the highest peak of Bitcoin in its historical record. Here's the psychological resistance level of $40,000. Here's the current psychological support level of $30,000. Psychological levels signify zones that can alter order flow and price changes. Now let's focus our technical analysis from the peak here to the current psychological support level here. Let's zoom in on this price chart. What can you notice? Technically, there's a formation of a potential head and shoulders, which thus supports a bearish implication. To forecast the measurement objective of this bearish chart pattern, we need to take the measurement of the depreciation in price movement from the peak here to the psychological support level here. This psychological level can be tagged as the neckline of this chart pattern. And this price depreciation measures a decline of 54% in the value of the price of Bitcoin from the peak here. To technically predict the price movement of Bitcoin based on this chart pattern formation, we have to replicate the decline of 54% in the value of the price of Bitcoin from the neckline here downward. The measurement objective level targets a $14,000 price level. This art of price movement prediction becomes more reliable if the measurement object price level aligns to a defined historical key level structure on the trading chart. To inspect this, let's zoom in. Zooming in, what can you notice? We can see the measurement objective price level aligns to the peak of the second market cycle here, which was in the year 2019. Therefore, a strong weekly close of price below the $30,000 psychological support level here would open the way for the bears to pull price downward. And this bearish breakthrough has a higher possibility to interest more sellers to pull price to the measurement object price level. Take note, the bears have to clear off the first peak of the first market cycle here before they could pull price downward to test the $14,000 price level. Alternatively, a continuous consolidation medium here and a strong bullish close above the $40,000 psychological resistance level here would suggest bullish interest. And this could validate the $30,000 psychological level as the new stage of the accumulation phase for the resumption of the next bullish market cycle. To wrap up my price prediction on Bitcoin, I support a more bearish move downward to $14,000 due to the presence of strong bearish confluence factors, which are 1. The presence of upright head and shoulders. 2. The reduction in bullish momentum. 3. Alignment of measurement objective to a defined key level structure in this market. 4. Historical market cycle repetition of patterns in this market. 5. Checking on the daily chart frame, the bearish setup based on my EMA crossover indicator. I use the 20, 50, and 200 periods EMA. We can see the 20 blue line and 50 yellow line periods now trades below the 200 red line periods EMA. This Bitcoin price prediction analysis is based on my personal view and not guaranteed. Therefore, ensure due diligence before the conclusion on your investment decision in this market.